Welcome everyone to another session of C4S classes where we'll be discussing a descriptive question that is important for RBI examination. So currently we are seeing payment aggregators in news a lot. Alright. So question for this series would be based on payments aggregators. So the question for today's session is discuss the role and impact of payment aggregators in the financial ecosystem. How do they contribute to the growth of e-commerce and digital payments? Identify the key challenges they face and what are the guidelines issued by the RBI for payment aggregators. So let's talk about payment aggregators before proceeding to the answer. So payment aggregators act as a intermediary between the customer and the merchants, or basically customers bank and merchants bank. So customer gives payment to the merchant via payment aggregator. So what payment aggregator does is it collects and hold payment on behalf of merchant. And after processing the order, the payment is credited to the merchant's bank. So it simplifies payment process for both merchant as well as customer. Merchants can accept payments without having to set up their own payment systems. Okay. So merchants don't need to have their separate payment system. All right. So it is making it easy and faster for merchants to sell their products online. All right. So let's move to the answer of this question. So this is a sample answer for this question. Here, first we will write the definition of payment aggregators. So this definition has been taken from the RBI guidelines. So according to RBI, payment aggregators are entities that facilitate e-commerce sites and merchants in accepting various payment instruments from customers. Payment aggregators also allow merchants to connect with acquirers and receive payments from customers, pool and transfer them to merchants after a certain time period. So in introduction, we have introduced what payment aggregators are. Now in body, we will address the rest of the question. So first part of the question was contribution to the growth of e-commerce and digital payments. So under first headline, it is convenience. So they provide a single integration point for merchants to accept various payment methods. So it kind of helps in streamlining the process of the payments. Okay. Second is they provide security as they employ advanced security measures like encryption, tokenization. So they protect payment data and reduce the risk of fraud. Next is cost effectiveness. So they are aggregating payments from multiple sources. Okay. So what they do is they aggregate the payments from various sources and transfer them in bulk to the merchant. So they are effectively reducing the transaction cost for merchants. All right. And it is more helpful for SME traders or enterprises. Next is accessibility. So they provide merchants access to a wide range of payment methods and offer innovative payment solutions. Okay, so it makes online shopping more accessible and hassle free. Next is growth support. So They offer services such as analytics, reporting, payment aggregators help to understand customer behavior. So after understanding customer behavior, merchants can offer products that satisfy the requirements of the customers. Okay. So in this way, payment aggregators help the merchants to service better to their customers. Now we'll be discussing the key challenges faced by the payment aggregators. So one of the key challenges, regulatory compliance. So if there are more compliances, compliance cost would increase. So increase in compliance cost will deteriorate the performance of payment aggregators. So what happens is they have to comply with various regulations and standards related to payments and data security. So which can be complex and costly. Next is fraud risk. So online transactions are more prone to frauds. So payment aggregators are facing risk of fraud and they must implement robust security measures. Again, then next is technical integration. So payment aggregators need to aggregate multiple payment methods into their platform. Then only customers, uh, the merchants will choose their platform. So the next point is related to this, that is competition. Market of the payment aggregators is competitive. Okay, and they have to provide the best services for less cost to merchants. So they need to continuously innovate and provide value added services to stay ahead in the market. Now we will be discussing the guidelines issued by the RBI for payment aggregators. So according to RBI, payment aggregator companies needs to be incorporated in India under Companies Act, whether it is under 1956 or 2013. And they should have a memorandum of association where it clearly mentions payment of operations as it's one of its services. Okay. And the existing payments, this circular came a while back. So at that time, payment aggregators needed to have a net worth of 15 crores. So RBI revised these guidelines and made sure that existing payment aggregators should have a net worth of 25 crores by 31st of March 2023, and thereafter they should remain the net worth should remain 25 crores. And the new payment aggregators in that timeline, when they will join, they can have a net worth of 15 crores, but that they are required to achieve 25 crores within the end of third financial year. This needs to be remembered. Okay. So payment aggregate, next point is payment aggregators cannot place limits on transaction amounts for a specific payment mode. This is one of the conditions written in the guidelines issued by the RBI. So these limits can be placed by the banks, not payment aggregators. Another thing is for refunds, all refunds must be made to the original method of payment unless otherwise agreed upon by the customer. So if suppose you have paid using credit card to the merchant, and if you are not satisfied with the product and you returned it, so the merchant is supposed to provide you the refund to credit card only. It will not be like merchant will pay you in cash or via UPI to your account. It will not happen. Payment aggregators have to reverse their amount of credit to the customer via original mode only. If you have paid using credit card, you will get your credit back in credit card itself. Next is changes in control. So any change in control or management in the payment aggregators should be communicated to the RBI within 15 days. So these are few of the guidelines that we have discussed for payment aggregators. So now that we have discussed all the parts that were asked in the question, we can conclude our answer by saying that payment aggregators are essential for growth of e-commerce and digital payments because they offer convenience and efficiency in online transactions. Here we can write about the challenges such as regulatory compliance, fraud risk, technical integration that payment aggregators face. So the need of the hour would be to address these challenges and support the growth and stability of payment ecosystem. Okay, so that's all for today. Thank you and have a nice day.